howdy there, folks. We've got to talk about three different things in this video here today. We're going to talk about the first one, which is the new angle Wall Street's going to have if they want to continue to crash this market more. They have a new angle that I want to explain to you guys. And essentially, they'll be able to exploit this for a bit if they decide to go down this route. They haven't talked like this yet, but I want to kind of explain to you guys what's going on there. Then I got a couple of pieces of, I would call it decent or good news to share with you as always. So I hope you guys enjoy this. Make sure to subscribe to the channel if you're not. First off, I want to talk about, let's get the bad news out of the way first, okay? And then we'll get into the goodish news, okay? So first off here, I'm sure you guys have seen it. It is like Wall Street is trying to one-up each other every single day as far as rate hikes go, okay? Every day, all of a sudden now it's like, it was like, oh, we're expecting 2 to 3 rate hikes in 22. Then it was, 3 to 4. Then it was 4 to 5. Then it was 5 to 6. No, look at this. Goldman sees Fed hiking 7 times in 22 instead of 5, okay? Look at this here. 8 rate hikes from JP Morgan's Michelle, okay? 8 now. We're at this situation now where Wall Street's like running over each other to like who can put the most outlandish amount of rate hikes possible, right? And what's next? 10? 12? Why stop at 8? Let's just say 14 rate hikes, okay? And so now you're getting into this situation where these analysts are just, trying to one up each other and, I think there's going to be this many rate hikes, okay? And so when it comes to this, a lot of folks are fearful around the market, right, in terms of like valuations, and people might pay a lot less for stocks, given if the Fed funds rate is higher than expected, right? And if all of a sudden you're talking about everybody's putting out these outlandish numbers, 7, 8%, what does that mean by the end of this year? 2%, 3%, 4%? Of course, it depends on how much you're raising each time, right? And so if you have everybody throwing that out there, it's going to cause a lot more fear in the market. If you have an analyst at Goldman Sachs, one of the most prestigious investment banks in the world, if you have, the most important bank in the entire world, JP Morgan, an analyst for them come out and say they're going to have 8 rate hikes, it's going to cause a lot of fear and panic in the market, okay? Now, whether that actually happens, it remains to be seen if that actually happens and they actually raise rates 8 times this year, right? And once again, somebody's probably going to come out with some other number that's outlandish and say they're going to, hike rates 9 times and 10 times, right? So you have that going on, and we understand that, right? But the next angle that I see them going with in this whole situation is this angle. So if you didn't know, essentially, savings accounts have been a joke for quite a while, right? And one of the reasons is Fed funds rates are a joke, okay? We've been at near zero for quite a while, right? Like 0.25 or whatever, it's a joke. So nonetheless, if you have a savings account, it almost makes no sense to put money in a savings account unless it's emergency money, right? Like money you want access to like right now, where it's not like you have to sell an asset like a stock or a real estate property, or, if you're into crypto or anything like that, right? So that's the main reason like people even put money in savings accounts, not to make any money, it's just so they have somewhere to put some emergency money. So the way I see the next Wall Street angle coming at this, if they want to, is they're going to say, hey, we think the Fed's going to raise rates ... time. And within 12 to 18 months, the Fed funds rate could be at 4%, which means you could have savings accounts getting well over 4%, maybe 4.5%, maybe 5%, right? And so if all of a sudden savings accounts are getting 4 or 5%, what they're going to say is people are going to take money out of the market, right? And they're going to put that in a savings account because they're going to say, well, I could probably get 8% a year in the market, but, that's risk. I'm taking risk if I put money in the market. But if I put money in a savings account, of course, it's guaranteed up to $250,000, right? And so somebody could look at that and be like, if I can get 4% or 5% from savings account, I'm just going to put some money there and not take any risk. So that will be the next angle I think Wall Street's going to go off of if they want to continue to crash this market. And keep in mind, big money, the hedge funds and Wall Street in general, they control this whole show, right? If they want to continue to send this market down, they'll continue to send this market down, right? Whenever they decide to funnel the money back out there and buy heavy is whenever we'll move up. And we just don't know exactly when that's going to be. And there's a lot of different opinions and when we're going to bottom in the market and when certain stocks are bottoming. We've seen a lot of encouraging action in the Russell recently in regards to if you're thinking about a bottom in small caps, but you never know, right? And so I just know, Wall Street always has a new angle. So if they want to take it there, they're going to be able to take it there. Because if all of a sudden you're talking about 8 rate hikes, right? Let's assume, JP Morgan all of a sudden says, 8 rate hikes, and they're going to do, a half a point each time. Well, shoot, by the end of this year, all of a sudden you're at 4+%, right? And all of a sudden savings accounts are getting 4.5%, 5%. Okay. So that's some food for thought there. In regards to savings accounts, by the way, better than a savings account, set up an account with Moomoo. You get your 5 free stocks valued up to $3,500 each. Check out pinned comment down there for that. Okay, so now I want to share some good news with you, or some good-ish news on a couple fronts out there, okay? So first thing is, if we look at the stock market over the past 5 years, we've had two really rough times. We've had, many different dips in the market throughout time over the past 5 years, but we had two major dips in the past 5 years. One was in December of 2018. And just for those that weren't in the market during December 2018, at one point, we were on pace for the worst December in the history of the stock market, beating out the Great Depression. That's how bad it had gotten in the market. Lucky enough, the very last week of December, we kind of pulled out and we bottomed and, we started going up from there. If it wasn't for that, literally, we were going to have the worst December in the history of the stock market. So it got ugly, and it got ugly fast. And then we started to climb out of that. All right. And then the other really rough time, obviously, in the past 5 years was during February into March of 2020, when once in a 100-year pandemic comes out of nowhere and just slaps the market. And all of a sudden it's like, oh yeah, we're closing businesses around the globe, like overnight. And that completely caught the market off guard. And we just, we fell off a cliff essentially, right? And there was the fastest stock market crash in history. There was something like 35% down in 22 trading days, which is just like, that's just hard to even fathom, like how much selling pressure was all put on the market at the same time. Just enormous, right? So those are the last two times in the last 5 years, at least, we had a really tough market. Let's put it that way, where it was vicious, right? And like I said, we've had dips here and there, but nothing super, super major outside of those two. Okay. So during those two time periods, there's a certain thing that has happened very recently. Okay. So if you don't know, I have this public account, which I started, a few years ago, essentially. And everybody in my private stock group can, they've been able to see every single move I've ever made in the history of that account, essentially. And we have done very well in that account. $458,000 in total gains over the last few years. 388,000 of that's long-term gains, 69 short-term gains. And if I recall, Fidelity doesn't even put in dividends into those numbers, which we should have, received 5 figures plus of nice dividends over the last few years as well. So this account's been, doing pretty well until recently. We've been devastated. By the way, we still got almost $400,000 in gains there as well, which are unrealized gains right now. But, we've done pretty well in this account until recently, and some of these stocks have been devastated. Now, what did December of 2018 and March of 2020 both have in common with right now? Well, those were the other two time periods that this account had 5 stocks or more that went down double-digit percentages, meaning I was down double-digit percentages or more on those stocks, meaning I was down over 10%, okay? During both of those time periods that happened. Basically, I got the account up and rolling in 2018, and right away, we went straight into like a market tank. So right off the bat, from the get-go, it was just, down, essentially, for this account, right? And then obviously in March, this account got absolutely decimated during that time when just everything got completely sold off. And so during those two time periods, we had 5 or more stocks go down double-digit percentages. And, that's exactly what has happened here recently. And so, if you want some kind of, good news out there, we could, I don't want to say we're at the bottom, but, whenever, we have several different stocks going in the negative double-digit percentages, both the other times we hit a bottom, so maybe it doesn't happen, maybe it does happen, okay? But just a little bright news there. Next bit of bright news is in this Russian situation, which obviously is really taken over the markets and the fear levels. And if there wasn't enough things to be fearful about in the market right now with inflation and the Fed and oh my gosh, okay? Then you have this on top, the Russia situation. Now, if you want some good news, look to the streets of Ukraine, essentially, okay? And, they're doing interviews with folks, and it's interesting. A lot of the folks that actually are on the streets in Ukraine aren't as fearful. And if you hear a lot of these folks, what they're saying essentially is this is like a big game between actually the West, the US, and Russia, essentially. And Ukraine's just kind of the pawn in this whole situation. And so a lot of the Ukrainian residents aren't nearly as scared as you might think they would be in this situation. Like, I would think it would be, pretty darn scary over there right now. But a lot of them just look at this as it's just kind of like mind games between the US and between Russia and negotiations and what's going to happen here. And remember, Russia's huge with, fossil fuels, obviously. And so if you create a lot of problems, tension, those sorts of things, it can drive prices up, right? And in this scenario, for instance, Russia could end up making themselves a lot more money if there's a lot of fear in the market. So take a look at this here. Overall in Russia, oil and gas provided 39% of the federal budget revenue and made up 60% of Russian exports in 2019. The share of all fossil fuel rents, the price of all fossil fuels minus the cost of producing them, amounted to 14% of GDP that year. So that's a massive, massive number here, okay? So think about it from this context, right? You're Russia. Maybe you want to invade Ukraine. Maybe you don't want to invade Ukraine. But the thought of you invading Ukraine puts you in a position to potentially negotiate because you invade, so you look like a good boy, essentially, in this situation, right? And it's like, hey, let's work out a deal, right? Also, by doing this, you create a potential conflict, right? Which causes energy prices to go up, which essentially ends up making Russia a whole bunch more money. So whether Russia ever does anything here or not, they could drag this out for another couple weeks, have oil prices continue to be high, gas prices continue to be high, and they'll put themselves in a situation where they end up just making a bunch more money in this. And if you think about it, it's like, it's kind of not the best way to play a game, right? But if you're in their shoes, you could understand why they like to play this game because, gosh, they're going to end up making a bunch more money because of this situation, right? Because everybody's like so fearful. What's Russia going to do here? What's going to happen here? And so meanwhile, oil and gas prices go up, right? Now, whenever this dies down, whenever that is, obviously oil and gas is likely going to come down to a more normalized level and there won't be as much fear in the market. But for right now, there's going to be a lot of fear in the market. And that's why you see a lot of oil and gas stocks have held really, really strong in this market because of several different factors. But this is one of those big factors right now where people are like, hey, Russia's a big player in the fossil fuels game. And, if things go crazy here, that's not going to be good for oil and gas, essentially. And so prices end up going up in that scenario. And here we are in this situation where Putin might try to drag this thing out for a while, right? And so ultimately, I think, in terms of the chances of invasion, of course, that's always a possibility. But the more you start to look at this and start to understand it, the more you start to say, I don't know if they're actually going to do anything here. This might just be a play on, hey, let's go ahead and scare everybody for a bit. Let's get a little more negotiation leverage, and let's go ahead and send prices of oil and gas up in this scenario, right? And the U.S. obviously loves to dip their toes in everything. We know that, right? We're always trying to get involved in everything, and I know a lot of people obviously hate that. They're like, why do we have to get involved in everything? Like, how do we always make a whole situation, like how do we get as the center of attention in that whole situation? But it always happens, right? And so nonetheless, it could end up being a lot of a nothing there, and ultimately just a play to push energy prices up. And you could understand why. So anyways, guys, hope you enjoyed this. As always, get some free stocks from Mumu. Down there is the pinned comment. Let me know your opinion. Do you think Russia's actually going to do anything, or are they just trying to send prices of oil and gas up? Much love as always, and have a great day.